Awesome. So why don't we kind of tap into Renko and get a little more deeper into how, you kind of utilize it to execute on trades.
Yeah, sure. So what we're really looking at are kind of one simple signal for Renko. The awesome oscillator is a key component of this, and one of the activities that I kind of always recommend people do is you want to take a look down here at what the awesome oscillator is doing,
Okay.
because it gives you some very clear clues to which direction and which side of the market has the strength. So if we take the all-time high, for example, here, we just stick a big line in that there, you can see that pretty much all of the interaction is strongest on the bearish side, the negative side of the awesome oscillator. So from a very, very quick overview, you can tell that the strength is all on the downside, which obviously matches up with the trend that we see in here. So we know that while that is the case, we have these small bullish moves here. We have the bullish move here, larger one in this region. Primarily, it's the bearish side that kind of has the control still throughout this period of time. Again, all encapsulated within this trend that we see with the moving averages as well. So what we're looking for in terms of signals are, number one, a very basic crossover. So when the awesome oscillator flips from bullish, from positive into negative, or vice versa, that's a signal for us. Renko and the awesome oscillator make those independently strong enough signals for us to basically take a trend entry based on the crossover. So with BTC, if we're to cross back over to the negative side here, we've pretty much got a simple short setup based on Renko cross. Right, so awesome oscillator combined with the Renko gives us a very easy kind of crossover point. The other thing that we'd be looking for are, like we highlighted through here, right? Those crossovers here along with the divergences. So when we notice that the market is weakening, especially when we've got a nice support resistance level right in the middle of this, then again, we've got another ability to be able to take a short position. So once we see the market trading through our former resistance region, not acting as support, we get the confirmation of that last leg of the divergence, and then we begin this crossover point. So the crossover is here on the breakdown, where we get the breakdown in conjunction with the crossover. And again, now we're kind of fixed on the bearish side of things.
So then from there, what actually becomes the trigger point for entering on the short side to follow the trend down?
So you've got a couple of things. Number one is you can build into the position up here. So you can build in with the anticipation of the divergence confirming. So you're looking for weakness through this region to take the short side, and you're aiming for either the bottom of the moving averages or another significant point you would have in terms of SR through here. Or you're taking basically the breakthrough. So you're taking where your crossover comes, which is basically on this brick here, into the breakdown, and you're playing it as a breakdown trade here. The stop loss above, and then again target wherever that's going to be. The issue that you have with the Renko side of things is that these boxes are quite chunky, right? So Renko is kind of distorted price and also time. So despite this being a 4-hour chart, right? If you take a look here, I've got price action already from October, November. You can see the way that this doesn't follow any kind of linear date pattern. It basically gives you data, and you can see March here is represented quite heavily. February is a bit shorter, right? So January doesn't even make it into here. So what it does is it prints these Renko bricks basically in conjunction with how much price action or back and forth happened during that period of time in order to give the data. So that's why you get some cutoffs. Like January was just a trending month. So we have like a very short kind of period displayed on Renko, whereas in March we had all of this back and forth. It's printing lots of data from a Renko perspective. So it simplifies everything. But when people look at this, they're often like, well, like, why do the dates look like that? And basically what's actually happening within each of those Renko bricks that we see. So each of these is fixed. I probably should have done this description right at the start, right, to explain actually what this is displaying.
What the Renko actually is.
What does this actually show? So each one of these bricks gets printed when a certain price move has happened, right? So I can set this information. So I can set it to a traditional, which what this will display is every $150 moved in BTC. This will show me a Renko brick for every $150 moved in BTC. $150 up, $150 up, etc. If I set it to ATR, what it will do is it will show me the average of a 14 look back period. So it will look back over the last 14 Renko bricks. It will do an average of those, and it will print all of the bricks to look like that. So it kind of
And
accounts
just
the
for our viewers who
volatility.
don't know what ATR is, it's average true range, but could you give a little more background?
Yeah, I can. So ATR is actually very good for trending markets. It's very poor for choppy markets. Well, I say it's very poor. It won't give you anything in choppy markets because it will just flatten out, right? It will just becomes like flat. And so you get periods of time like this in Renko where just nothing happens, and you get then suddenly, large periods of time where, days pass and nothing's happened. You might print one brick if you're lucky. And that's it. So you don't get much information. For some people, that's an advantage because it will help filter out the chop. So Renko does a fantastic job of filtering out basically the shit for you and leaves you with a trending market picture. The downside of that is if you want to be able to action things in the chop, Renko on this time frame and this view isn't going to give you anything. Right? It's not going to give you like any look in whatsoever. So ATR will print based on our average values, and traditional is actually far better for the majority of people. It's a far truer reflection of price. Whereas ATR does something where, for example, I map this resistance level on BTC here with these touches into the resistance and then the big breakthrough. When we get what we call a repaint of Renko, which is where that ATR value changes and it applies it to all of my bricks, suddenly this will look very different because my brick value has changed. Therefore, it's thrown off the way the chart looks. And suddenly I've got a box that's floating in the middle of nowhere. Right. So ATR is super awkward for Renko, especially from trading views perspective, because it's a constant repaint. And sometimes your nice clean levels, your nice clean setups look very different the next time you log into TradingView because you've had a volatility spike, which means it's repainted all of the other stuff to match that. So traditional is far better for the majority of people. Super simple, super clean, and then you can tailor it based on what you want. If you want to be scalping $25 brick size in BTC, then you can start scalping $25 brick sizes, right, to make things as small or as large as you want them to be.
So it's super versatile then for whether you want to scalp or swing, depending on, brick size and dollar value that you're trying to basically aim for.
Yeah, so like this was the start of the scalping system, was kind of all based in this as well, but tick Renko. So this was basically just as and when the price kind of printed, it was just, my bricks were printing alongside it, which was great. So scalping perspective, very good, but I would highly recommend tick Renko and not trying to use a traditional value on TradingView. You'll have to use another piece of software for that. But yes, you can scalp or swing on the back of it. Swinging is easier because at its heart, it is a trend following system. But at the same time, obviously, we can scalp based on the lower time frame trends and swings in the market anyway. So
makes sense. So I think, can we